Hi, Matt McAleer, President, Director of Private Wealth, Cumberland Advisors, with John Mousseau, CIO, Cumberland Advisors. Been quite a week. And before we get into the week in review, let me mention that we have some exciting news to share with clients on Monday about the evolution of Cumberland Advisors. Stay tuned. The markets. Bonds a little back up, trying to just ease some of those recent gains.
Back up and filling. You always heard of the idea, buy on the rumor, sell on the news, right? So you've had a little bit of backup ever since Jay Powell cut rates September 17th, quarter point. And since then, the 10-year bond, which briefly touched 4% on the Treasury bond, is now about a 4.19. And that was about 6 or 7 basis points rise this week. And basically across the curve, higher. Is it crazy? No. 30-year bond is about a 4.77. That's up only a couple of ticks.
Right. Shorter
paper up about the same. Muni bonds yields up a little bit more than that. 20 ticks on the short end, but that's there from a very low level. 30-year, 10-year AAA, 292, so still well below 3%.
Below 3, yeah.
And great demand on the deals that came this week. We had 3 over $1 billion deals that came, well oversubscribed. I think what the market is basically saying is that the market ran a lot before the Fed even cut rates.
Yeah, it priced a ton of it in.
Priced a ton of it in, and you're seeing some back into filling. And by the way, those lower yields that you got in front of the Fed's decision have helped some of the economic statistics. You've seen new home sales pick up a little bit. Durable goods pick up a little bit, higher than expected. So they're benefiting from the lower rates. Mortgage rates are down significantly from where they were. And you've seen it even in things like building permits. And I think more importantly this week, you saw PCE come in right on schedule. It's Fed's favorite measure, and personal consumption expenditure. For the month, 0.3, year over year, 2.7, right as forecast. But you know what? Compare that to a few months ago when it was 2.4. It's creeping a little higher, some of its tariffs. This is why the Fed's in the conundrum that it's in. Yeah. But, listen, it's a pretty healthy bond market.
Yeah, and I would say the same thing on the equity market. A little backing and filling, down a tick across the indices for the week. Probably need that. May see a little bit more of that in our portfolios. Good bid straight across the board in the industries and sectors we own.
Sure.
Weren't overly active this week in tactical trend, which is, again, our multi-asset strategy. Can never be in one asset, can never be in any more than 75% of one asset. So, for example, can't own more than 75% of domestic equity or fixed income, any asset class. We ratcheted up a touch our international exposure. Keep in mind, we own DFIV. I've mentioned that before. That's a dimensional international value. It's been wonderful this year, up 22-23%. We own a small cap international value in our international strategy. That's been really trading beautiful. And we added that to tactical, just a 3% position, took cash down to a lower level. That is an Advantis ETF, and you'll see that in your portfolios. In terms of what we're seeing in that international versus domestic, I think it's still today is taking people a little bit by surprise, John, that international isn't backing off. No. Remember, we spoke for years, international is dead, sunk in the sand,
wilderness,
and you couldn't make a nickel. It's really put together a solid year, not just year to date, but going back last fall. We're now starting to see similar movement out of small caps and mid to a degree.
Who have certainly been the rear end of the caterpillar.
Yeah, and we've talked about them similar to international. Sure, you weren't flat for 15 years like international, but small cap really dragged versus the S&P 500 or large cap growth. This reversion trade in small cap is now starting to go on 4 or 5 months. not the 1 or 2 month head fake we've seen recently. So I was impressed by the last 8 weeks of movement in small caps in both our U.S. core and our tactical and our U.S. ETF. Didn't add specifically to that. We don't have much cash in those strategies, which has been fine. Market's been treating us just fine. What I may do over the coming weeks is just take a little down from some of the areas that have worked so well,
right,
and see if we don't build up from our 5, 6, 7, 8% small mid cap position, get it to 10 or 12 or 15.
Yeah, I mean,
Sound like an idea?
it sounds like an idea because you try to buy the laggards a little bit when they start showing signs of life.
You know what Cliff Asness says? Anyone know Cliff? Wonderful, longtime owner of AQR. It's a quant shop, great writer, great podcast. He says sometimes you have to sin a little bit.
Yeah.
And that's what I feel like if we're adding to small caps. But we'll have some fun. Enjoy the weekend. We'll talk to you again next Friday.